Clinton Wilkins here. Here's an update about the latest Bank of Canada announcement.
No move on interest rates as expected from the Bank of Canada, but also no word on when interest rates would start going down. For what that means for mortgage rates, we're joined by Clinton Wilkins of the Clinton Wilkins mortgage team at Centum Home Lenders in Dartmouth. Hi, Clinton.
How you doing, Rob?
I'm great. What did you think of the announcement?
You know what? I wasn't surprised, but I think a lot of Canadians were hoping for the rate to be reduced. I think, we were cautiously optimistic that obviously the rate was going to hold, but I think some people were just ready for the rate to start being reduced, which is not going to happen just yet.
Yeah, the governor of the Bank of Canada, Tiff Macklem, said, we've come a long way, certainly in the fight against inflation, but the battle is not won yet. So it would be premature to talk about interest rate cuts right now at the central bank level. What does that mean for mortgage rates?
Well, right now, as we know, inflation is still very high at 3%. Obviously it's been going down, but the reports in December was that, inflation was beyond the target. I think the interest rates have started to soften in terms of a fixed rate product. We're seeing the rates being softer. Even in the back half of last year, we saw some reductions. And I can tell you, even going in here until January, we are start seeing some interest rates that are even starting with a 4, which I think is very promising news for Canadians and for mortgage borrowers. There's a lot of Canadians that have their mortgage coming up for renewal. I think the stat is that in the next 2 years, about half of Canadians are having their mortgages renew. And many of these Canadians are renewing into interest rates that are much higher than the rates that they would have been coming out of. So I think there's certainly some concern out there. And I think everyone is cautiously optimistic that this plateau will continue. And hopefully, by the summer months, we're going to start seeing some rates being reduced. One of the chief economists for one of the big banks, actually with Scotiabank, had said that we think the rates are going to even be reduced maybe 100 basis points this year. And they think maybe that median mark is about 200 basis points less than where they're at. I think all the economists kind of think that it's going to be a little bit of a slow burn between now and seeing these rates being reduced. But I'm optimistic that by the end of 2025, we may be more in a median mark. And I think that would be, a prime rate somewhere around that 4% mark.
Okay. So what are some rates now? Give us some examples of what some popular mortgage rate would be right now, Clinton.
I would say, one of the most popular products that we're seeing every day is a 3-year fixed rate. And I think those rates certainly have been being reduced. You can get a 3-year fix now in a low 5% range, which I think is really great news. When we were talking last year, like you and I, Rob, with a lot of the rates were in the 6 and 7% range. So I think seeing a rate in a low 5% is great. And you know what? Canadians were just so programmed to taking a 5-year fixed. And I think we have to be very cautious with our rate selection and really seek the advice of an unbiased mortgage professional right now, because there is so much variety in the rates. And I would say there's almost more differences between rates and lenders now than there was before. The rates are still moving very quickly. There's been a lot of pressure on bond yields, which has brought some of these rates down. And I'm optimistic that they're going to continue, hopefully on a downward trend. You really need to think about the product that you're taking now, because just imagine if you do take a 5-year fixed rate, and right now you can sometimes get a 5-year fixed, sometimes as low as 4.99, for example, but you're going to be stuck with that product for that 5-year period of time. So in a couple years, if you were wanting to break it and we're seeing, better rates, in that 3% range, you could pay a very significant penalty to exit that term early. And this is why we're seeing more consumers coming in to asking for a variable rate mortgage product. They certainly have been becoming more popular ever since we've been in this plateau situation. More people are wanting to take a variable rate. Yes, these variable rate mortgages are more expensive than their counterparts in the fixed. But the reason that a client would want to take this variable rate is it gives them some more flexibility. If you were to break that mortgage early, you'd pay a penalty of only 3 months interest. And the real upside on this variable is you can always convert it into a fixed, when these fixed rates come down, and maybe into a better place for a rate that would be better to your suiting.
Okay. And what kind of, say, spreads or differences are you seeing right now between the high ratio mortgages versus the mortgages that aren't high ratio?
Mm-hmm. So high ratio mortgages, the rates are always the lowest. The one thing that I would really, encourage our listeners to look into, if you do have a mortgage that's coming up for renewal, and if it was previously conventional, and if your property value is less than $1 million, you can technically do what we call an insurable transfer from lender to lender. So you could leave the lender that you're at, go into a new lender, and it would be insurable. Now, you don't need to pay any insurance to the Canadian Mortgage Housing Corporation. It's not going to cost you any extra money, but you're able to access these best rates. And the insurable rates at 65% of the property value are the same rates that we're able to get on these high ratio transactions. So the other day, Rob, just to give you an example, we were able to get a rate for a client on a 5-year fix because that's the product that they really wanted. We were able to get 4.89 on a 5-year fix. So we are certainly seeing some terms starting with a 4, which I think is very encouraging news for Canadians.
Okay. So the news reporters at the news conference in Ottawa today, they tried several times to pull it out of Tiff Macklem. When are you going to lower rates? When are you going to lower rates? He wouldn't give it up. You couldn't sway him from that. But
I think part of the reason. Sorry to interrupt, but I think part of the reason that it's hard to get it out of him. He basically fell on his sword saying that the rates were going to be low for a long, long time. So I think now he's even more extra cautious to give any hints or tips.
Right. But what's the kind of consensus in the mortgage industry right now when lower rates could be in the offing?
I think the consensus in the mortgage industry, and even talking to economists, they are projecting that we're going to see the rates start softening in the summer. So I think, going into June, July, August, we're going to be into a lower rate environment. And I think overall, we think the rates are going to be somewhere around 100 basis points less. And that means 1% less than where we're at now.
Right. Okay. Very interesting on Bank of Canada Day. Thank you so much, Clinton Wilkins. Great to hear from you.
Thanks for having me, Rob. Have a great day.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.